In big news, the Federal Reserve announced that their long-awaited digital payment system will be launched in July. This payment system, dubbed FedNow, will allow for instant access to your money 24 hours a day, 365 days a week. This is a major update from the previous processing options that were available, such as SWIFT or ACH. If you wanted to send money, your request would have to be routed through an ACH or automated clearinghouse, or it would be sent through SWIFT, which was established all the way back in the early 1970s and stands for the Society for Worldwide Interbank Financial Telecommunications. But the problem with these systems is that SWIFT is not fast. It's not swift. If you wanted to send money, it usually takes anywhere between 1 to 4 days for that money to be received on the other end. Not only that, but you can only initiate a transfer request during banker's hours. So if you want to send money on a Saturday, your request essentially just sits there until Monday morning before it even begins to process. On average, transferring money through the SWIFT network takes between 1 to 4 business days to complete, which is why when you receive your monthly paycheck from work, you will often see notes such as payment pending when you open up your bank statements. And as terrible as this system was, it really was all that we had. Banks had a monopoly over the financial ecosystem, so there was no sense of urgency to innovate. We could send data around the world in milliseconds, but it takes 4 days to make a financial deposit? It makes no sense. But with the rise of cryptocurrency offering cheap alternatives and instant access, as well as third-party payment platforms such as Venmo or PayPal offering instant transactions, the banks knew that they needed to finally update their systems. Once FedNow is released in July, banking platforms that sign up for the service will be able to transfer money seamlessly in a matter of seconds as opposed to days. And like I said, the best part is this will be available 24/7, 365. No more frustrations of not being able to conduct business just because it's a weekend or a holiday and the bank is closed. This could have several profound implications on the way the world conducts business. First, payment platforms such as PayPal will likely lose a significant amount of market share as their instant payment system is no longer a benefit. Instead, now it's just the norm. PayPal is wonderful, but unfortunately, PayPal is not a bank. So any money that you have stored with PayPal is not FDIC insured like banks are. So if PayPal were to suddenly go bankrupt or there was some sort of fraud in the system, that money that you have stored in PayPal could very well likely be gone. Additionally, it will allow businesses to streamline operations and better manage their finances because they won't have to worry about a significant delay between accounts receivable and accounts payable. FedNow may reduce people's reliance on very short duration payday loans. By having your money available instantly instead of 4 days from now, it may help poor people escape the vicious cycle imposed by these predatory type loans. And lastly, this will have a profound impact on large-scale financial institutions and the overall stock market. Currently, the stock market is only open during bankers' hours when the banks are actually open. It really is just as simple as you can't buy shares in a company if you can't access your money because the bank is closed. Finally, having 24/7 access to your money means that the stock market could also transition into being open 24/7, as now investors actually have access to their money. For investors, this is a profound change, as oftentimes stocks are highly volatile on Friday afternoons right before the market closes. Investors know that if anything bad happens over the weekend, it could cause a significant price drop by the time the markets reopen on Monday. By allowing markets to remain open constantly, it reduces overall volatility in the marketplace. Additionally, it will likely reduce fees as the difference between the bid and ask prices shrinks, as brokerages no longer need to cover these high expenses and reserve requirements. And having instant access to that money would solve the liquidity problems such as those that happened during the GameStonk saga. For those unfamiliar with the story, there was a company on the brink of bankruptcy called GameStop. hedge funds knew that the company was in trouble and they placed huge short positions against the company, essentially betting that the stock price of GameStop would go down. However, through a popular Reddit forum, millions of regular people like you and me launched a coordinated attack and started buying up millions of shares of this struggling company, forcing the price of the stock to actually increase. The price of this near bankrupt company jumped from a few dollars per share to over $400 per share, causing billions of dollars of losses for Wall Street investors and bankrupting several hedge funds who had bet against this company. But there was a massive problem with all of this that many people attributed to collusion or outright fraud. You see, many brokerages, including Robinhood, suspended people's ability to purchase shares of GameStop while all this was happening. The conspiracy theory is that these hedge funds pressured Robinhood to stop selling shares so that this frenzy would fade and people would stop driving up the prices. But this isn't really what happened. Instead, Robinhood was legally forced to stop trading this particular stock because it didn't have enough reserve funds on hand. So let me explain. When you buy a stock, the money doesn't actually leave your bank account and get deposited into Robinhood for several days while these payments are processing through SWIFT or ACH payment systems. Because Robinhood doesn't have your money right away, Robinhood is forced to keep some of their own money on the sidelines as reserves until your payment clears. The more volatile the stock price is, the higher the reserves needs to be. So when there was unprecedented trading volume for these meme stocks and unprecedented volatility, the amount that Robinhood needed to keep in reserves exceeded the amount that they had, and thus they were not legally allowed to make any more trades until they secured additional funds into their reserves, which, as we know, that moving of funds takes several days. And in the meantime, you couldn't trade GameStop, causing all kinds of conspiracy theories to form. But if Robinhood had your money instantaneously when you hit the buy button, they would no longer need to keep any money in reserves, solving this problem entirely. Some people think that this transition to an instant settlement monetary system will eliminate the need for CBDCs, otherwise known as central bank digital currencies, which are essentially an officially sanctioned cryptocurrency issued by the federal government, effectively creating a digital dollar. However, I don't think that FedNow comes anywhere close to eliminating the need for CBDCs. I'm extremely thankful for the transition to instant settlements and looking forward to eventually being able to trade stocks on a Saturday, but cryptocurrency is the future of business. Now let me clarify that, since crypto is a very polarizing topic. I'm not talking about Bitcoin replacing the US dollar, although I am a big fan of Bitcoin. Instead, what I mean by crypto being the future of business is the various layer 1 protocols such as Ethereum, Cardano, Solana, and many others that are able to execute smart contracts instantly and for virtually no cost. The use case scenario for such a system in the business world is nearly unlimited, and so I feel confident that within the next 20 years, interacting with these layer 1 ecosystems will be as normalized as using the internet is today. So any payment system implemented will eventually need to be able to interact with these blockchain systems. So I feel there will always be a need for a CBDC. But let me know what you think. Leave a comment down below with how you think FedNow will change the financial landscape. If you enjoyed this video, consider subscribing, and as always, I'll see you all again next time. Thanks.